What's going on, everybody? In this video we're going to look at some recent Chargepoint news, check out the chart, and a few other things. Let's get started on this. And I will leave this article down below for you in the description, as well as some links to some stocks and cryptos. But we're going to look at something from Chargepoint's investor relation tab that goes into this a little better, I think. And we had news that just dropped today that Chargepoint is announcing availability of NACS, or North American Charging Standard, solutions for new and existing EV charging deployments, enabling customers to continue to serve any EV in any parking space. So they announced the ability of NACS connector options for new orders and currently installed CP6000s, CP250s, and Express Plus customers. And this addition of NACS enabled solutions, in addition to J1772 or the CCS solution, enables customers to serve the charging needs of any EV. And as said by Bill Lowenthal, which is the Chief Product Officer of Chargepoint, Chargepoint's 15-year history as a leader in the EV revolution has prepared us for evolving market dynamics, as well as enabled us to predict customer and driver needs. Our highly modular charging platforms, combined with our new NACS charger options, allow customers to be confident that their investment in EV charging is successful for any connector scenario. We remain committed to developing networked charging solutions that ensure any EV can charge in any space. And I wanted to quickly hop back to this article just to bring up one quote by Wallbox's CEO, Enrique Asuncion. I'm sure I butchered that, but essentially he said it's as simple as changing a plug, and that there is more technology in an EV plug than in a gas pump. However, that's a reasonable oversimplification. So this is something that I said, these charging companies will adapt to if necessary, and it is as simple as changing a plug, while a little bit more complicated than changing a gas pump. But going back to Chargepoint's investor relations, they're basically saying that their products can be reconfigured with the NACS connector options later this year, and that the CP6000 will be sold or can be reconfigured with the NACS connector options in early 2024. And on the Chargepoint app that shows over 743,000 active and roaming charge ports, it currently includes filters so you can choose the right connection for your EV. And Chargepoint will be able to capitalize in the anticipated spike in NACS equipped EVs that are entering the market in 2025. Now I'll leave that investor relation page as well as the other article down below for you. But there's been a lot of fear in Chargepoint and a lot of other chargers lately because of worries about this charger type. And I believe a lot of that fear was misplaced, as you don't really have to build this system again from the ground up because they are pretty modular. So stock price wise, I could certainly see a bit of a rebound as a lot of this fear was misplaced. But let's take a look at the chart because we do have some things to go over. And if you're a long-term investor in Chargepoint, you can definitely see these new recent lows as a great opportunity to acquire more shares of your long-term company. From a chart standpoint, this is certainly bearish. We're facing a declining 50 and 200 MA that we are under. We of course recently created new lows, which is not bullish. And being a long-term investor, I certainly think this is a good time to acquire more shares because who knows, it could definitely go up in price. And this could be the lowest we could get Chargepoint at. However, on the chart, it is clearly in a downtrend. And we're going to get into Chargepoint's balance sheet in a second, but just based on the trend, based on the macro, the high interest rates, I wouldn't be surprised to see this come down even more. But we do have some other things to consider as well, such as this negative price action we've seen due to this news that was misplaced, as Chargepoint will be able to support NACS charging. And I did want to quickly bring you guys to the revenue here. They are expecting $156 million in revenue, which would be a record quarter. They're very likely to see quarter-over-quarter revenue growth as well as year-over-year revenue growth. However, there is a possibility we might not see record revenue if they can't meet this expectation. 2 quarters ago, they did report 152, nearly 153 million in revenue, and their expected revenue of 156 million is just a hairline over that. And of course, they are still expecting to be unprofitable. Now, turning to their balance sheet, they have $320 million in debt, 283 in cash, which does give them a decent cash run rate. But one thing to consider, as these guys aren't profitable, is their debt is likely to continue to increase. And in the current state of things with the high interest rates, this is certainly not a good thing to have debt and have to continue to accumulate debt. But one thing to consider is the Fed did pause. Maybe we see another rate increase. Maybe not. I'm kind of on the side of we're not going to see another rate increase. But the wording of the Fed in the last meeting kind of gave that opportunity that if they have to raise rates, they still can. However, I personally think they aren't going to. And by the end of the year, we may even see rate cuts. And these small caps, Chargepoint included, could see a boost in share price in anticipation of cuts coming along, which will help these companies that have to acquire debt at high interest rates. And when you look at their balance sheet and the fact that they're not profitable, it's not surprising to see that they're creating new lows, as the market is still very fearful with the current state of the economy, with these high rates, with inflation still needing to come down. I think Wall Street sees Chargepoint as a risky stock to buy now. But as a long-term investor that sees Chargepoint one day reaching profitability and sees rates coming down, and also sees the huge inflow of EVs and needed charging applications over the years, I think Chargepoint will make it through. They do have a decent cash balance, but that debt is certainly something to be aware of. I personally think Chargepoint is a deal right now, but that doesn't mean we can't see new lows, especially when looking at the bearish chart. But let's face it, no one owns a crystal ball, and there's always a point in the market where you think we're at a 52-week low, we're going to create new lows only for that stock to actually be at the floor and bounce. But let me know where you guys think Chargepoint will go. Do you think this news will positively affect Chargepoint? And do you think the macro will improve in Chargepoint's favor over time? Thanks for watching, guys, and I'll catch you later.